I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a guy we haven't had on for a long time. I'd like to call him a new guest, but he always has new ideas. And his name is Bix Weir from RoadToRuta.com. Bix Weir coming to us from California. Thank you for joining us today on USAWatchdog.com.
Hey, Greg, it's good to be with you.
Well, I want to extend your introduction a little bit. You've been writing on the internet about the coming spiraling down of the economy since the late 90s. Your site's been on RoadToRuta.com since 2007. And you've been basically covering, the goings-on, the economy, and everything comes back to the failing economy, the wars, the strife, the upheavals. And one of the things that I have noticed, and I look at this Ferguson thing and think, it's a terrible thing, and I don't know who did what to who and why the cop shot so many times. I don't want to solve this case. But the rioting and the protesting and the marching, is there more to it than just this kid? Is this the tip of the iceberg of the bad Main Street economy bubbling up?
It very well could be. It is definitely, there's discontent out there in the public with the press covers so many things up. And the government gives us so many lies on statistics about unemployment, about GDP. You name it, they lie about it. It goes back to the 1984 newspeak type of atmosphere these days. So there's so much bubbling up underneath the surface of what they show us on the TV. I do think this is the beginning of something much bigger. Now, I don't think it's only Ferguson that will, it'll grow from there. I think you're seeing little spots. I know I live in Oakland, and there was issues in Oakland about the Ferguson incident, but there was also a planned protest for the Occupy Wall Street people. So it's kind of bubbling up again. After all this work I've done, I see another 2008 coming right around the corner, and what can be done about it? Who knows?
So you think this Ferguson thing has a lot more to deal with the real mainstream economy as opposed to, it's only 2% inflation and look at new highs on the stock market. And is that what you're telling me?
Well, the majority of people in America are not doing well. I know the stock market's doing well. I have a lot of friends who are in the stock market and they're very happy. The problem is that's the 1%. And it gets back to the Occupy story, which says the banks having such low interest rates only helps the 1%. And that's where they're getting their money, that's where they're getting their wealth, and that's why the 1% are so happy. But the 99% are saying, wait, something is wrong here, something is off. And as soon as there's another hiccup in the economy with the more bank fraud, you're going to see a big uprising throughout the United States.
And you said we're right around the corner from another 2008. Explain what you mean. Where are we in this spiraling down scenario? We stopped it, with all the money printing, or we retarded it. We slowed it down. We still have all kinds of, wars and rumors of wars and all kinds of failures and continued money printing and lying. Where are we in this spiraling down? You said we're 2008. Another market crash is right around the corner. Explain.
Well, there's 100 things going on right now that could kind of tip us over the cliff. Some of the big ones are the U.S. dollar. You got China, you got Russia, you got the BRICS countries are basically abandoning the U.S. dollar. They're starting to trade oil for other currencies and other commodities. I mean, oil is the largest commodity traded on Earth in terms of dollar volume. And that's why the U.S. requires the world to buy and sell oil in U.S. dollars, because all those dollars need a place to go. If they're going towards the oil economy, it's the petrodollar, as they call it. Well, people are backing off of that. That's why we went after Saddam Hussein. He said he was going to start selling oil in something other than the U.S. dollar, and we went in and invaded. It's all about protecting the unbacked fiat currency. It's all about rigging the markets, and it's all about keeping that dollar safe. And as soon as Russia and China start following through with these deals that they've already announced about trading oil for other things, you're going to start seeing the collapse of the dollar, which will trigger the derivative bomb, which is a $50 trillion derivative position held by J.P. Morgan in order to keep interest rates in line.
And you think the whole thing spirals out of control then? I mean, do you think we'll have war? I mean, this is a lot of my people that read the site think, listen, the whole thing in Ukraine is contrived. And even I reported that we helped foster this coup during the Winter Olympics, the Sochi Winter Olympics. I mean, that's pretty obvious that the United States, initiated a coup of the government in Kiev in Ukraine during the Olympics, and then there's all these reports back and forth, who shot down the plane, who crossed what border with what military equipment, the propaganda and the lies and the reporting. Who knows what to believe? What I do see is it getting worse, not better. Do you think we'll have war with Russia and war with China just to save our paper dollar?
That's usually what happens. We go past, in the past 100 years, as soon as the economy starts to wobble and the bankers see no way out, they'll start a war. And you can see a lot of it with Syria, with the ISIS problem in Iraq. And I mean, Obama, the guy who supposedly won a Nobel Peace Prize for not wanting to go to war, is starting more wars all around the country. They're pushing for war.
All around the world, you mean?
All around the world, exactly. They're pushing for war, and because war has always been there, get out of the problem, get out of jail free card for the economy, because it stimulates production. All their rich friends who own the arms companies get wealthy, and then it starts the whole cycle again. It's kind of a trickle down type of military economy, and they're going to push for it. I am hopeful that there are more sane voices in the United States now with more information that has come out. Syria is a great example. We were on the brink of war with Syria back when we were talking about the weapons of mass destruction, and we held back. There are people within the U.S. government now saying, we're not going to let this happen again. So I hope they're strong enough and their voice is loud enough and the people stand up enough to say, no, we're not going to let you save the economy by going to war.
You said that we're headed for another crash. We have another G20 meeting coming up, I think, in November in Australia. And at some point, aren't the BRICS countries, isn't the rest of the world going to shun the dollar that we're printing like crazy? Aren't they just going to say, hey, we're done? They're making by printing all this money to save these banks, basically, they've made the dollar the pariah currency, the currency everybody wants to shun and avoid if they can. Do you think that we fall out of bed between now and the end of the year, or do you think the economy falls out of bed in 2015? What's your time window for things, getting back to where we were in 2008?
Well, it has always been my contention in the last year and a half that 2008 would be the end of this version of the banking con. So, yeah, I do see it happening between now and the end of the year. Obviously, the end of the year is getting closer and closer.
You think we have a market crash between now and the end of this year?
Yes, definitely. And there are signs pointing to it already. For example, the U.S. dollar, it is controlled in London on the derivatives market. Hundreds of trillions of dollars are transacted to control interest rates. That's how it's done. It's not done, the China selling their U.S. dollars and Russia selling U.S. dollars. That's not what moves the market. What moves the market is the derivatives held by J.P. Morgan and friends that steer interest rates on a daily basis. They can do that all day long with computers. The problem they're running into now is that the world is starting to understand that all these derivatives is just a game. It's a facade. We're pulling back the window to say, why are there hundreds of trillions of U.S. dollar derivatives floating around out there? We almost ran into the weapon of mass financial destruction back in 2008. I think that's right around the corner again. We're right back where we were.
Well, let's talk about the silver fix. Somebody wrote on the site, say, you didn't talk about the silver fix. You're a good guy to talk about that. They're going to change the silver fix, but I can't imagine they're going to completely give up the goat here and not suppress the metals, because as gold and silver are real money, and they don't want to see gold and silver go up against a fiat dollar or a fiat yuan or a fiat, pound sterling. Tell me about the silver fix.
Well, the silver fix, it is nothing. It's a benchmark number. It's not the value of silver, although they tout it as the value of silver. So it really means nothing other than it is used in every single derivative contract for silver coming out of London, which is huge amount of silver derivatives coming out of London. So they ended what they call the silver fix, and that's the term. It's the London silver fix, and they instituted the London silver price. Now, this was all forced on the silver market by Deutsche Bank. It's my contention that Deutsche Bank wants this problem to happen, for the silver derivative market to go into crisis, because they're underwater on some future silver derivative contracts with the term silver fix in there. that they want to get out of, and they can either, claim a force majeure or claim, hey, there's just too much problems in the silver market to settle up on these derivative contracts. It's kind of where we are now, and why this new silver London price is really a hokey mock-up from the CME and Thomson Reuters to create another way to rig the silver market with prices. It's really a bizarre thing, and it's got nothing to do with people buying and selling silver. It's got to do with this auction of prices and volumes on supposedly with the LBMA members, but there's no silver being transacted. There's no deliveries being made. It's just another made-up number by the banks.
You think Deutsche Bank is wanting the whole silver market to implode so they can just, whoop, all that fraud, or we're just going to walk away? Is that what you're telling me?
That's exactly what they're doing. And it's not just Deutsche Bank. It's all of them. The bankers know that they've been rigging the market in silver for so long, and there's so many silver derivative contracts out there. They need to walk away. The regulators are getting more in tune with regulation. And, in the silver market, everybody knows the market's rigged. Not everybody knows how big the rig is and how it's done. It's done with computers and derivatives every single day on the LBMA and on the COMEX. That's how it's done. And with this new change in the silver language, it's going to have to change every single derivative contract in silver. That's the important part, is that this new language changes all the derivative contracts.
Well, they're going to force a blow up then, right?
I believe, I don't know if it will be a blow up in silver. I think there'll be less rigging on the derivative side in the future because not many people are really buying this London silver price mechanism. And there's supposedly the CME and Reuters have a conference call on Friday to explain it to people because it's so ridiculous how it is presented and how supposedly they throw it through this algorithm and it kicks out the perfect silver price. And the price of silver is very important. They use that for pricing all retail metal around the world. They use something that has no basis of physical exchange. And the U.S. Mint just came out last week and said, we're going to use the new London silver price to price our silver eagles. It's crazy what is being used to price silver.
Do you think when they lose control of this, Deutsche Bank, if this whole thing, implodes, does the price of silver skyrocket? Does the price of gold skyrocket? What happens to the price of gold and silver when the rigging game ends? As you say, you think it's going to end soon.
Yeah, the problem with it.
Do you think it's going to end soon? I don't want to put words in your mouth. Do you think the whole rigging thing is going to end soon? And what happens to the price of gold and silver?
I do think it will end by the end of the year. The problem with trying to figure out what the real price should be after the crash, there is no real silver exchange in the world. The COMEX is futures and options exchange. There is a delivery mechanism, so you can say, well, you can kind of get physical through that. The LBMA is an association. It's the London Bullion Market Association. There is no exchange. These are banks and bullion houses trading with each other and then telling the world what the price is. That's not an exchange either. And then you got the Shanghai Bullion Exchange. That's more of an exchange. And if you look at the Shanghai silver market, there is silver flying out of those warehouses. They can't keep it in there fast enough. So, where is the price of silver determined? Right now, it's a couple bankers sitting around still with this new London fixed mechanism saying, here's your price of silver. Where will it go if this finally stops? Who knows? The question is, where will it be reported? Without a real silver exchange where buyers and sellers get together and trade metal for money, how can you figure out the price of silver? What we need in the world is a real physical silver exchange where real sellers, mining companies, for example, come in and sell metal, and real buyers, investors and industrial buyers come in and buy it. That's what an exchange is, but they can't have that happen because if you can't control the price of silver, and gold, you can't control the unbacked fiat money system. And that's what they've been doing since the 70s.
How much undervalued is silver in your mind?
Massively. I see the gold to silver ratio. Now you got to remember that all the silver that has ever been mined has mostly been used up and consumed in cell phones and flat screen TVs and in solar panels. Most of the gold that's ever been mined is sitting there in bank vaults and personal vaults. The gold and silver ratio should be closer to 5-to-1, 6-to-1 right now. And what is it? 65, 70-to-1. It's so out of whack. And we know gold is rigged too. But even in comparison, just in comparison to gold, I would expect in a free market the price of silver to probably come down to parity with gold at some point, but then go back to where it's coming out of the ground, 5-10-to-1 ratio there. And that's a better way to look at it.
You're saying that, wait, let's stop. You're saying that the price of silver might, at some point in this cycle of this craziness to get a real market, might end up being the same as gold. Right now they're pricing it at $1,300 an ounce, or around $1,300 an ounce. You're saying that silver would be the same as gold?
It should be, yeah. It's a more important metal. Yes, gold has history as a monetary metal, but so does silver. Silver has a longer history as a monetary metal than gold. They used it in China, a couple thousand years ago. But what is going on now is, with the modern electronics, silver is a vital metal. Life would change if everybody was hoarding silver for use as a monetary metal and not using it in the industrial side of it. You wouldn't have your cell phone, you wouldn't have your flat screen TVs, you wouldn't have smart bombs. All these things that use silver and solar panels, that's a huge consumer of silver that is growing and growing. So, yeah, the price is off. The price of silver should be much, much higher, both on a monetary side and for the industrial consumption that is the majority of what's happening right now.
So you think at it's a little low, around $20 an ounce, you think it should be 100 or 200 or 500, or you think it should be way higher than what it is?
Pick a number. I judge the number. I will judge the number in the future on how it relates to gold. And I do think the gold market has been, I see the gold market going up 10 times from where it is now, just because of the rigging that's been going on. That data's shown everybody that yes, gold is rigged. I think silver will perform much, much, much better because of the industrial aspect of it. It's a monetary metal and an industrial metal. And even though the banks will tell you that, oh no, it has no monetary value, they've been saying that for years, it's not true. It has huge monetary value, and you can find, and that's exactly why they have to rig it so hard, and exactly why it's going to spring up so high.
And this is all part of the implosion that you've been commenting on. Suppress the price of metals, print lots of money, make people think the stock market is the way to be, that you're getting richer, tell people the economy only has 2% inflation. Okay, so it crashes. What happens after the crash?
Well, that's an excellent question. Obviously, there'll be chaos. The banks obviously will shut down. The crash is going to be a derivative. It'll start in the derivative markets. Now, the derivative market is a multi-quadrillion-dollar market. It is so big, it is beyond comprehension. The banks that play in derivatives are the ones that are the large holders of everybody's money. J.P. Morgan, HSBC, Wells Fargo, Bank of America, all these banks play in the derivative market because they've been charged with controlling the system for all these years. When this derivative thing melts down, just like 2008, we were maybe a half an hour away from all banks shutting down because they're all interrelated, all interlinked. One person that says, "Well, I have it in a credit union, all my money in a credit union," well, their customers don't, and it's got to do with the snowball effect that they've been trying to hold off. So yes, I do think we're looking at a global crash of the monetary system. What day it will happen, I don't know. It already started. It started in 2008. We were literally 1 hour away from it. And that's why Hank Paulson went into Congress and said, we need this money and we need it now. Just sign this. And everybody thought it's either the end of the world or we sign this thing. Well, we bailed out the bankers. They're richer than ever. They've built the derivative bubble up even higher. And now we're on the brink of the next time. But the next time, I don't think the Congress is going to be able, even if they get paid off by their bankster, I don't think they'll be able to stand up and say, yeah, we're going to bail you out again. I think they're going to let them crash this time.
What happens to the U.S. dollar when in this next crash? I mean, does it end up turning into like, Confederate currency? I mean,
yeah. The majority of U.S. dollars are electronic blips these days. Electronic money's been around since like the 80s. So it's kind of, what happens to all unbacked fiat currencies that have crashed over the years? They go to zero. That's their intrinsic value is what they like to call it. If the U.S. dollar goes to zero, which it does, it will. All unbacked currencies go to zero, but the only reason this has lasted so long, since we went off the gold standard in 1971, is the computer programs that were implemented in the 70s and still running today to control all these systems. It's almost exactly like the Wizard of Oz. The little man behind the curtain is sitting in the basement of the U.S. Treasury and at the New York Fed, orchestrating all these players to do what they're supposed to do, getting all the banks on side to rig every market to make sure the system stays together. And it's hit a point now, it's so big and so unwieldy that they want it to crash so we can move on to something else.
Well, what do you do if they want it to crash? Then let me just ask you this. What do you think they're doing? Because they're not holding stocks and bonds and dollars. They're not holding that. What are the people who want it to crash doing with their fiat currency? They're not going to hold it and let it go to zero.
Well, I believe there's two groups that want it to crash. One, the bankers want it to crash because they know that they're in trouble. They have so many misdeeds over the past 100 years and the system is so unwieldy now. They want it to crash so that they can say, "Help! Who could help this? The whole world crashed. It wasn't our fault." There are people within the United States who are so deeply in debt they would love the system to crash, because when the system crashes and the dollar crashes, all debt goes away. All electronic debt and all mortgage debt, because these bankers will be bankrupt. And what will happen is we're going to have to, as a country, come together and say, okay, that system didn't work. All debt is then gone, because that's the biggest problem right now. Everybody has too much debt. So if the debt is gone, all the electronic assets are gone too, because that's the other side of the debt. For everybody's debt, someone else claims it as an asset. And it's usually the bankers that claim that. So it's going to come down to a point where this whole system's going to shut down. There'll be a couple of weeks of chaos, obviously, trying to get back on our feet. Although the U.S. has been planning on this since at least the 70s. And the Fed Boston talks about that in some of their publications that I've analyzed. They've been ready with kind of a plan to go back to a gold-backed system, some kind of gold, maybe silver-backed, but I don't think there's enough silver. A gold-backed system in the United States. And I think the United States has been hoarding gold. I know they've been hiding secret gold mines throughout the world, or throughout at least the country. And that's why it's so hard to get mining licenses for certain areas within the Grand Canyon. It's all kinds of gold waiting for us to go back to the system and then start fresh.
Well, won't the bankers just say, you know what? We had the deed to that house, and you refinanced it. We have all the right paperwork now. And that's our house. You still owe us for that house. Aren't they going to do that? I can't imagine they're going to let millions and millions of houses just, you can have the house. No. I don't think that's going to happen. Is that what you're saying is going to happen?
Well,
I don't want to debate you either. I'm not trying to make you look bad. No, I'm just thinking, I'm trying to navigate the enormity, the enormity of this if the whole system implodes.
That's a great example. And the enormity is it's obviously the biggest thing that will happen in human history. The reality of, for example, housing is a great idea. Banks don't hold mortgages. They put them in mortgage-backed securities and they sell them off to 401ks, and China bought a bunch of them and things like that. They take all those mortgages and all those contracts and they put them in the DTCC, the Depository Trust Clearing Corporation, who's supposed to store them for the world. They own all the shares of stock, the bonds, everything. This is the same DTCC that during Hurricane Sandy flooded their entire vault at 55 Water Street in Manhattan. Hurricane Sandy came in, somebody left the door open, I know who did it too, and flooded the vault. It was underwater for almost a month. They finally got all the water out, and then they set it on fire. 28 people went to the hospital. The bankers, are trying to cover up their tracks because there's so many fake stock certificates and failure to delivers that people think they go out and buy a stock for their 401k and they think that brokerage company goes out and buys that stock and puts it in their account. They don't. They take that money, they'll credit your account with an electronic blip that says you own 50 shares of Newmont Mining, but they're not going to go out and buy it. They're going to sell that same share to 50 other people before they have to declare. And all that is supposed to be observed and handled and regulated by the DTCC, and they can't do it. That's why the high frequency trades, they're never settled. There's no money exchanged in those trades. There's just electronic blips going back and forth that the DTCC is charged with, theoretically making sure those trades settle. But over 200 to 300 million shares every single day go unsettled. And that's through SEC records. It's crazy. It's a gigantic Ponzi scheme that is completely unregulated and is just waiting for that moment to crash. And then everybody can throw their hands up and say, this is so out of control. Nobody can control it. It's not our fault. We're walking away too.
Didn't you want to say this on a TV show? I don't want to name the TV show, but didn't you want to say this on a TV show, a nationwide TV show, and they interviewed you and you said just what you said to me and they cut it out?
Yeah, I won't name the show either if you don't want me to name it. But it's a nationally recognized network, and they were doing shows on conspiracies, and this was a big one, and they brought me down to LA and interviewed me for a full day, and they loved it, and the producer and the camera people were running out to get their money out of the bank right after the interview, and they killed it. They within a week of it, when it was supposed to be aired, I called the producer and he'd been fired. And I called another guy that I knew there, and he said, we're not going to be able to show it. They're not going to let us show it. And it was sad.
And you did all this off of published reports. I mean, I remember the fire in the vault down there. I remember Hurricane Sandy. It was flooded. It was reportedly flooded, as you said. And you're saying all the records are mishmash. They're done. They're gone. Poof. Bye-bye.
It's 100% true. This is fact stuff. I'm not just making it up. And if you look at the volumes on the stock market and you look at the volumes of your traded stocks, stocks have a certain amount of float, a certain amount of shares that have been issued for the entirety of the company. Within 3 or 4 days, the total float of every company trades back and forth and back and forth and back and forth. Who's settling those transactions? It's impossible to settle those transactions. Back in the 40s and 50s and 60s, they used to have couriers, riding bicycles back and forth with checks and stock certificates and contracts. Well, that all went digital in the late 70s, early 70s, and now it's completely out of control. Nothing is ever settled. It's amazing. And when the music stops, everybody's going to raise their hand and say, I own XYZ mining company, but everybody will own the same share of stock, and they'll all be fighting over who actually owns it, which is another interesting thing. The DTCC actually doesn't hold these stock certificates. It's a trust, and they give them to their subsidiary, which is called Seed and Company, CEDE. And it's funny because they're ceding ownership over to this company. Nobody knows who owns it, probably the Rothschilds or the Rockefellers, and nobody can get the contracts, the actual transfers from the DTCC to this shell company called Seed and Company. At the end of the day, and you asked earlier, who owns your house, who owns your stock? It's this shell company called Seed and Company.
Well, and the final question, I'm going to circle back to this because I said, so what are the people who are, who are wanting this collapse to happen? What are they investing in? They're not investing in, stocks unless they're seeding company. They're not investing in dollars. They're not holding Federal Reserve notes in fat bank accounts with the FDIC insurance. What are the people who want the collapse to happen? What are they investing in?
Well, mainly I would assume physical gold. There's a lot more physical gold out there than they're telling you. A lot of it has to do with shorting the paper market in physical gold and silver and taking home the real stuff. Because in the crash, all the paper will go away. The real stuff that you're holding within your own possession, that's key when you're investing in gold and silver. Keep it in your own possession. Yeah, I think they're doing that. But they're also buying land and water rights. They're trying to get control of the water because they know that we need water to live and it'll be very valuable. So physical assets. And, it's hard to tell. They're clearly not out there thinking, oh, this is great, I'm going to buy more derivatives. But the banks are using those derivatives to control the market. And so at some point, the derivatives will go away, the paper and electronic, what we call assets, will go away, and then you'll be stuck with, you'll have your car, you'll have your house. Your debt will go away because there'll be so much anger at these banks. No way a bank is going to sue you for, repossessing your house when you've stolen their bank account. It was your fault. Your bank account crashed. They're not going to get away with it. So it's kind of a situation. A lot of the senior bankers are either quitting. Bankers don't quit at the top of a market. They quit right before it's going to crash. They take their goods and they run. A lot of bankers are quitting. A lot of bankers are getting knocked off for various reasons. I think we're so close to that point. I've always said by the end of the year, this will be not done, but we'll be so deep into it that we'll have at least another 2008 coming up.
I gotcha. Well, Bix Weir, really like to thank you for coming on roadtoruta.com. Bix Weir, thank you very much for coming and enlightening us with your perceptions and your analysis, and you've been doing it for a long time, my friend. Thank you for joining us on USAWatchdog.com.
Thank you, Greg.